So welcome everybody to the Grant Thornton webinar on VAT and the e-commerce package and the significant changes to VAT legislation, which will come into effect on the 1st of July 2021. Originally, these changes were promoted by the EU Commission to come into effect from the 1st of January, but they've been delayed because of Brexit. Myself, and for those who don't know me, my name is Jarlath O'Keefe, and I'm a tax partner and head of indirect tax in Grant Thornton. And Jeanette Maxwell, my colleague, will go through the presentation of the slides. And we will leave time at the end for a question and answer session. I also believe there's a facility to ask questions during the presentation, and we'll try and answer them if possible as we go along. There is a lot to get through. But I do assure you that you will be gone by the 10:40. We will share all of the slides and I think a recording of the presentation with you. So everybody will have all the information that they need. And I guess our details are also on the presentation. So if you have any follow-up questions, please do feel free to give us a shout afterwards, and we'll get back to you with whatever information that you need. If we just move on to the next slide. So I guess the first question to ask is, why was the change needed? And I think the reason for this is threefold. Firstly, the new rules are fundamental but evolving shift towards taxing goods and services at the point of consumption, rather than the establishment of the supplier. This is seen to be a more fair and equitable tax measure. And you know, it could be to the detriment of Ireland going forward, but this has been a shift and an existing trend in both direct and indirect taxes. Secondly, it is envisaged that the new rules will lessen the administrative burden on the taxpayer. Under the current rules, taxpayers are required to have multiple registrations and file tax returns, etc., in those jurisdictions. The new rules will eliminate a lot of that administration. And thirdly, and also importantly, the non-EU businesses currently have a competitive advantage when making B2C supplies of goods into the EU. These changes should address that anomaly and should ensure that there's a level playing field no matter where the supplier is located. So if we just move on to the next slide. So, you know, that's the reason for the change. And I guess, what will the change mean? So we've identified what the changes are and what are the key areas of the change. So the legislation will introduce a one-stop shop. It'll be known by the acronym OSS for B2C, and B2C is obviously business to consumer sales of goods, which is an extension of the existing scheme for services. So there already has been a scheme in place for a number of years, a one-stop shop for electronically delivered services, broadcasting and telecoms. This, in effect, is an extension of that. This replaces the existing, as I say, distance sales rules. The threshold under the new regime is going to be low. As we point out there on the slide, it's 10K, and it's not 10K per country, it's 10K if you're selling into, it's an amalgam of, or an aggregate of the sales that you make to the 26 other member states. Previously, the distance sales thresholds had were between 35 and 100,000, depending on which jurisdiction you sold into. The new rules, and we'll talk about this in the next slide, I think, the new rules also allow for electronic interfaces or marketplaces to be brought into the supply chain. And it also removes the relief from import VAT for goods of a value of less than €22. So there's a lot to take in. It also introduces a new regime known as the Import One-Stop Shop, so an acronym IOSS, and you'll find that there's going to be a lot of acronyms in this, but you will get to those information provided, so you can read those at your leisure. If we just go on to the next slide there, please. So as I mentioned, there is a big change in regard to electronic interfaces or marketplaces, as they're also known. And, you know, big examples of these being Google, etc. But there are any number of these. And as I mentioned in the last slide, These new rules for electronic interfaces or marketplaces will facilitate the sale of goods to consumers in the EU. And such interfaces are likely to have additional reporting obligations where they are deemed to buy and sell the goods. If, and this is the two criteria, if the goods are shipped from outside the EU to private consumers in the EU in a consignment of less than €150, or the goods are shipped within the EU and the seller of the goods is a non-EU established business. And it's also important to note that these electronic interfaces have to keep their records for more than 10 years, or for 10 years. And we'll just move on to the next slide. So this in effect is a good slide, and it's a good slide because I didn't put it together, so I can say that. It gives a good example of a decision tree for a supplier in terms of how this new provision will work, and where an electronic interface will have responsibilities for accounting for VAT in different jurisdictions. If we just go on to the next slide. So as highlighted in the last slide, there is now a deemed supply model confirms that the electronic interface is the actual supplier of the goods for VAT purposes. Works on the same basis as a commissionaire structure, which I'm sure many of you are familiar with. So, albeit that the supply legally will go from an underlying supplier to the ultimate customer, for VAT purposes, there's a deemed supply from the underlying supplier to the electronic interface, and from the electronic interface into the end customer. So that allows the revenues in various jurisdictions to ensure that they are able to collect the correct amount of VAT from the interface, which perhaps in previous administrations or previous exams, they would have thought they wouldn't have been able to capture that VAT. Just move on to the next slide. So this also confirms what the electronic interface is not responsible for. So it's not it doesn't apply in the new legislation. So there's no deemed supply where the electronic interface is merely processing payments, where it's only listing or advertising goods for sale, or where it only facilitates or the transfer of customers from one interface to another interface or another marketplace without further intervention in the supply of those goods. Just move on to the next slide. So there are, as we said earlier, there are special schemes. But the key advantage of this particular scheme, the one-stop shop, which is probably going to be the most predominant of the new schemes, ensures that there's going to be less administration and there'll be easier communication for taxpayers with the revenue. And in effect, there'll be a single point of contact. So rather than, as I've mentioned previously, in relation to distant sales, where a taxpayer, for instance, in Ireland, if he exceeded the threshold in regard to the supply of goods into other member states, and as I said, the thresholds range between €35,000 and €100,000, where then that Irish taxpayer would have to register for VAT purposes in that other member state and then file VAT returns in the other member state under the one-stop shop regime. They only have to register in one member state. It's done electronically. They file a single electronic return, which takes care of the VAT for all 26 member states and is remitted electronically by the Irish Revenue to those other member states. And then it gives you a single point of contact, which is important. And usually it will be in the language of the taxpayer in the jurisdiction that taxpayer is established in. So you don't have to deal with revenues in other jurisdictions. If we just move on to the next slide. So this is a good slide again. It gives you an example of how the special schemes work and what circumstances that they apply. So that this is both the union scheme, the non-union scheme, the type of supplies that are made, and the taxable persons who will be responsible for accounting for the appropriate VAT. And if we just move on to the next slide. So this is the non-union scheme. The key to note in this slide is that the non-union scheme also applies to services, but is extended to services which previously were taxed where the supply took place. So it's going to include other services such as the valuation services or property related services. There's a lot to take in here. As I say, everyone is going to get these slides and a recording of the presentation, and we'll have a facility for questions and answers. And I think Jeanette is going to take over and go through the remaining slides.
Great, thanks, Charlotte. We just move on to the next slide. So just to move on then to the union scheme, so the scope of the union scheme then is going to be extended from the 1st of July 2021. So it's going to cover, in addition to the cross-border supplies of the TBE services, it's also going to cover all other cross-border supplies of services, and that's of course to non-taxable persons in the EU. It's also going to extend to all intra-community distance sales of goods and electronic interfaces who become deemed suppliers, as explained earlier by Charlotte. So a significant extension of the scope of the scheme, no longer just the TBE services are covered. Next slide. In terms of the suppliers who are covered by the scheme, that's also significantly extended from 1st of July 2021. So the scheme can be used by a taxable person established in the EU for supplies of B2C services taking place in a member state in which he is not established, and that's important because if services are supplied to customers in a member state in which they are established, they have to be declared in the national VAT return, and they can't use the OSS for that purpose. A taxable person is not established in the EU to declare and pay VAT for the intra-community distance sales of goods, and then it also covers an electronic interface, and that can be whether they're located inside the EU or outside the EU. So a significant extension then under the types of supplies and also the actual suppliers themselves. Next slide. So a question we get asked a lot is, well, if I opt for the union scheme, can I, decide which supplies I want to fall under the scheme, and can I keep some of my supplies outside that? So the short answer is no. If you opt for the union scheme and you have both cross-border supplies of services and intra-community distance sales of goods, all of these must go under the OSS, under the union scheme. You can't decide to do, let's say, your distance sales of goods through your national VAT return. And we've lots of further examples then in the appendix as to how this operates in practice. Next slide. So a key point then that Charles touched on earlier is the place of supply threshold. So the key point here is that the €10,000 threshold is not synonymous with the union scheme. So what I mean by that is that everything that falls under the union scheme does not also fall under the €10,000 threshold. So that sometimes can lead to an inconsistency in calculating whether you've reached the 10,000 limit or not. So from 1st of July then, the threshold covers cross-border supplies of TBE services and intra-community distance sales of goods. But importantly, the 10,000 does not take into account supplies of other types of services carried out to customers in the EU. So when you're calculating it then, it's the total value of your cross-border TBE services plus your intra-community distance sales of goods. So up until the €10,000 threshold is hit then, it's the same VAT treatment as domestic supplies, which means that the VAT arises in the member state where the particular supplier is established. And just the final point then to mention there is if a supplier hasn't reached the €10,000 threshold, he can opt to use the one-stop shop. But the important point is he is tied into that. That's a 2-year commitment for, so 2 calendar years, and he can't come out of it before that time if he makes the decision to go for the union scheme without actually hitting the 10,000 threshold. Next slide. Another key aspect is, well, what exactly does a threshold not apply to? So starting at the last bullet points, I think that's the most important one. If a supplier is supplying goods and he is established in more than one member state, the €10,000 threshold does not apply. So if he's established in both Ireland and France, the €10,000 will not apply in that instance. It doesn't apply to domestic supplies of goods made by a deemed supplier, suppliers of services outside of the telecommunications, broadcasting and e-services. It doesn't cover distance sales of imported goods, because obviously that's covered under the import scheme. Inter-community distance sales of goods who are made by a supplier who has his establishment outside the EU. And finally, supplies of TBE services made by a supplier who's not established in the EU, because again, that's covered under the non-union scheme. Next slide. So moving on then to something slightly different. So the import of low value goods. So I just included a little chart here just to summarise the current position, which is before 1st of July, and then what the scenario will be after that date. So as you can see on the left-hand side, it includes what's the value of the imported goods, and then we have it broken down into VAT and customs duty. So what should stand out straight away from that slide is, at the moment, any goods that are imported which have a value of less than €22 are exempt from VAT. But as of 1st of July, that exemption is gone. So regardless of the value of the goods imported into the EU, VAT is going to be due in the EU. So less than €22, both VAT and will be due, but it'll still be exempt from customs duty. If the value of the consignment is between €22 and €150 from 1st of July, obviously VAT will apply. It applies regardless of the value, and it's still exempt from customs duty if it's under the €150. And then any consignments over the €150, it's VAT and customs duty arise. Next slide. So why was the import scheme introduced? So the import scheme then, this allows suppliers who are selling goods that are dispatched or transported from a third country, so outside the EU, to consumers inside the EU. And this allows those suppliers to collect VAT on the distance sales of imported low value goods, and they can declare and pay the VAT via an import one-stop shop. So it's, I suppose, an extension of the OSS, if you like, but it's an import one-stop shop. The scheme is optional, doesn't have to be used. But if it is used, the importation of the low value goods into the EU is exempt from VAT, and instead the VAT is paid as part of the purchase price that's paid by the consumer. So there's more consistency then in that regard. Again, you know, it is optional, but we do feel there are benefits there for a lot of clients in adopting the IOSS. Next slide. Just the next slide, please. Perfect. So what exactly is covered by the scheme? How do I know if my supplies will fall within it? Well, the first point then, the goods must be dispatched or transported from a third country at the time they are supplied. So they must be coming from outside the EU into the EU. The goods are dispatched in a consignment of an intrinsic value not exceeding €150. So as the name suggests, it applies to low value goods less than €150. The goods are dispatched or transported by or on behalf of the supplier to a customer or any other eligible person in a member state. So they have to come into the EU. Finally, it does apply to a wide range of goods, but it does not apply to excisable goods. So any, you know, alcohol, cigarettes, tobacco, the IOSS does not apply. So the OSS scheme would apply to those type of goods, but bear in mind the import one-stop shop does not extend to excisable goods. Next slide. So just a phrase we've commonly touched upon today is the intrinsic value. And this, I suppose, is important in calculating the 150 threshold and knowing whether or not what we're dealing with is a low value good. For commercial goods then, the intrinsic value is the price of the goods themselves when sold for export to the customs territory of the EU, and that excludes transport and insurance unless they are included in the price and are not separately invoiced, and any other taxes and charges as ascertainable by the customs authority from any relevant documents. if it's of goods of a non-commercial nature, is the price which would have been paid for the goods themselves if they were sold for export to the customs territory. And again, I have some examples in the appendix of that, because this is quite a complex area, especially if there's multiple goods being sold in multiple consignments, and perhaps the packages are going in different orders, and it sometimes can be quite difficult to ascertain, well, have I hit the €150 or am I in fact over that, and then the IOSS may not apply. Next slide. Okay, so if you're wondering then, well, does the import scheme apply to me? Well, you have to fall within one of these categories. So you'd have to be a supplier established in the EU, selling goods to a customer in the EU. If you're not established in the EU and you're selling goods to a customer in the EU, you still can use the scheme. You can use it directly, which means you don't need to appoint an intermediary, or indirectly, and that's through an EU intermediary. And that's like a tax representative, someone that's going to fulfill your indirect tax obligations on your behalf. Electronic interfaces can use the import scheme if they're established in the EU, and they're facilitating distance sales of imported low-value goods for underlying suppliers. And remember, for facilitating, that requires a certain standard. So they must be setting the terms and conditions, arranging for the delivery, not just simply processing the payment. It also extends to electronic interfaces not established in the EU if they're facilitating distance sales of these imported low-value goods, less than €150, for underlying suppliers. And again, the electronic interfaces can use the scheme directly without an intermediary, or indirectly using an intermediary. Next slide. So I'll just leave you with the special schemes and this little matrix here. This is an overview of the various schemes, so it can be, quite confusing, and you have to consider whether you're established inside the EU or outside, what type of transaction you're actually involved in, and bear in mind more than one scheme may actually apply to you. So if you're based outside the EU, depending on your type of supplies, you could be eligible for the non-union scheme, the union scheme, and the import one-stop shop. So I hope this little slide here is helpful just in terms of segregating your type of supplies, what scheme you're eligible for, and importantly then, whether you're obliged to get a tax intermediary or not. Next slide. So just something a little bit related then that we do get a lot of questions on. In relation to the position of Northern Ireland and Great Britain, where they fall in amongst all of this. So as you'll be aware by now, from the start of this year, the Northern Ireland Protocol means that NI remains subject to EU VAT rules in relation to goods, so not services, but in relation to goods, and that includes the distance selling rules. So if you're listing today, you're an NI business, you're selling to Irish or EU customers, you can still avail of the one-stop shop. Next slide, please. In Great Britain then, it's slightly different because as of 1st of January this year, Great Britain is no longer part of the EU VAT area in respect of goods. So the knock-on effect from a VAT position is that EU distance sales are no longer applicable to sales to private customers in GB. They would have to register in an EU member state, and it would be a non-union OSS return that would be applicable to them. We can assist you in relation, we have colleagues that can assist on the UK side. Just to touch on one of the new rules that have been implemented there, VAT is now due on the point of sale for consignments of goods imported with a value of £135 or under. So which is similar to the EU €150 threshold. And again, the exceptions mirror the EU position. Those subject to excise duties are not included. Of course, we're not going into great detail in the UK side today, but we are able to assist if you do have any queries in that regard. Next slide. So just before I hand back to Jarlath and we do our Q&A section, I've just put together 2 slides on common questions that we've got asked over the past couple of months just in relation to these changes. So the first question then is, well, what if my business is already registered for MOS? Do I need to take any action? So if your business is already registered for the mini one-stop shop, for supplies, you're maybe supplying, e-commerce services, let's say, the registration does continue under the OSS, but you may need to take a look at that, because depending on your type of supplies, you may need to update your registration data there. And if you are making supplies that are going to fall under the IOSS, the MOS will not automatically extend to that. So you will need to take separate steps in that regard. Can my business be registered for multiple schemes? And the short answer is yes. So if you're EU based, it could be the IOSS and the union scheme. If you're non-EU based, it could be all three, the non-union, the union and the IOSS. Again, it depends on the type of supplies. Next slide, please. So how do I register for these special schemes? So the pre-registration has opened. It just opened from 1st of April 2021. The revenue guidance was published just quite tight on that deadline. If you do need to register, we would advise doing it sooner rather than later. We're just about 6 weeks to go now until the 1st of July. It is quite straightforward on your ROS, the VAT OSS section, in other services in your ROS account. Of course, do let us know if you need any assistance with that. But we do think it is a good idea to pre-register and have all the necessary questions answered so that you're up and running come 1st of July. And just a final question we get in relation to a tax intermediary and appointing them. So an intermediary should be established in the EU and is responsible for payment of VAT and fulfilling your VAT obligations if you are a non-EU established supplier. Again, there's a form on the revenue website that should be filled out. And again, we would recommend doing that sooner rather than later. Next slide, please. Okay, so that's the end of our presentation. We're just coming up to 10:30. We have left a couple of minutes for questions, or of course, if you don't want to ask them today, we'd be delighted if you wanted to drop us an email or give us a call after the presentation. Okay, Jarlath, I'll hand back to you.
Yes, thanks everybody. There is a lot to take in there. I think everybody should just be aware that this is going to impact, online retailers of goods, online marketplaces clearly, who are facilitating the sale of goods. We need to ensure that your contracts are reviewed to ensure that you look at all different supply chains. It's also going to impact on logistic operators who at the minute would collect VAT and import duty where it's applicable when supplies are made from third-party jurisdictions. And it'll also impact on other businesses that are supplying services, which are currently subject to VAT in the jurisdiction where their customer is established. I think there are a couple of questions coming in. Jeanette, I wonder if you want to have a go at that first one in relation to if you're a non-established supplier, UK based and selling goods business to consumer in excess of €150. I don't think the rules apply, but it appears the IOSS doesn't apply. I guess the question is what happens there?
Yeah, that's a good point. So yeah, the IOSS will only apply, Sandra, if it is over €150. So I think you go back to your normal, B2C rules that operate outside of the IOSS. Your normal place of supply rules for B2C. So non-established supplier, UK, selling goods, B2C into Ireland then. I assume then it's going to be a typical B2B, the place of supply is where the business supplier is established. So they would charge UK VAT. But again, one of the exceptions to those, B2B rules may apply. But if you want to, send me an email with the specifics afterwards, we can take a look at it, because I think we need to know the actual type of supply, whether it falls within the general B2C rules or whether it falls within one of the exceptions.
Yeah, and I think there's a question from Marcelo who's asking whether this will apply to diaries, journals, books, etc., which I think clearly the answer would be that it would. albeit a lot of these products would be at the zero rate of VAT. So you would need to look at I guess the VAT rate applicable in the individual jurisdictions where you're selling into.
Yeah.
Another one from Adam here, in terms of businesses from the north is going to be selling excisable goods from online store to NI customers, ROI customers, GB customers. If we go over the 10,000 threshold ROI customers, we would have to file a one-stop shop return for all sales. I think, Jeanette, you might answer, but I think you mentioned that excisable goods don't form part of this.
Yeah, that's right. That's a good question, Adam. So your excise goods from the online store. So yeah, that's right. So the OSS would apply all right, but the import one-stop shop does not extend, unfortunately, then to your excisable goods. That's excluded, that's outside. So the OSS would apply all right, but not the import one-stop shop.
And I guess then the point as well, Adam, is that the North remains part of the EU, as Jeanette highlighted in the presentation, for goods or for supplies into the South shouldn't be affected.
Yeah.
Will this affect businesses who provide online services to EU and non-EU businesses? And that's from anonymous attendee. So any B2B services or supplies of goods aren't affected by these new rules, which come into effect on the 1st of July. This is all in relation to B2C, and B2C being an end consumer, so a private individual effectively, and not somebody that's in business. If my e-commerce sales to the UK and the EU countries is less than 10K, do I have to worry about registration, or can I just pay any VAT on those as normal through my VAT 3? That is the case, Jeanette, isn't it? If it's below 10K, you just continue as is, and you charge Irish VAT on your sales to other EU customers. Non-EU customers would be zero rated.
Yeah, that's it exactly. You just have the option. You don't have to register, but if you wanted to, you are tied in then for the 2 years. But you might want to just wait until you hit the 10,000 until you avail of the scheme. Yeah.
There's a question there, and I'm not sure we'll be able to get into it, but what is the effect on B2C online services? So really, I guess, Jeanette, you might have a go at that, but it depends on the type of services that is being supplied.
So, if you're already, perhaps if you're already supplying online services, they might have already fallen under the MOS, under the TBE rules. So the E there stands for electronic services. So you may already be availing of the MOS scheme. And in which case then it'll automatically roll over to the one-stop shop. So if you're already using MOS, it shouldn't be a significant difference. And obviously if you haven't used MOS, we would recommend that you do register for the one-stop shop, especially if you're selling into multiple EU countries. It will make your administration a lot easier and save costs. You obviously won't have multiple VAT registrations, so it's something that we would recommend availing of.
Yeah. Another question in here in relation to what if the seller is not incorporated in the EU? So let's assume a non-EU business, but is storing inventory in EU locations via Amazon. Will Amazon collect the VAT on the seller's behalf? Do sellers need to file a VAT return? And I think the answer to that one is it really depends on what your commercial relationship is with Amazon. In a lot of jurisdictions, if you hold inventory in that jurisdiction, there is a requirement for you to register for VAT and file VAT returns. And a lot of jurisdictions will have a zero threshold in regard to that. It also depends, I guess, on the income terms in relation to what you're selling. But if it's B2C and you're holding inventory in your own name, then it's likely that you would have had to register for VAT purposes. in that member state. But as I say, it may be that it falls under the marketplace or the interface rules, but it really does, as I say, depend on the commercial arrangements that you have in place with Amazon. Because I know from my experience, a lot of companies that deal, say, for instance, with Amazon, Google, with Apple, they can work in two different ways. Either they're directly selling to the end consumer, or they are selling via that consumer, where there is a legal buy-sell arrangement and not necessarily even a deemed buy-sell. Yeah, it's the same one. I think we've got most of the questions at the minute. Really just want to say thanks to everybody that has joined us this morning. We will share, as I say, all of the information, so you will receive all of the slides, a recording of the presentation. And as I say, if you have any questions that you think of later, or having reviewed some of the slides, you come up with a question, just send it in to Jeanette or myself, and we'll respond to you straight away. And so look, thanks very much. Hopefully you found that helpful. There is a lot to take in, but as I say, we are here for you if you need anything. So thanks, guys, and enjoy the rest of your day.